Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 U.S. market update. Well, the end of the week was all about the jobs reports. Thursday we had the initial jobless claims, which for the 20th straight week showed over 1 million people filing for first-time unemployment benefits, but it was better than expected. And then on Friday we had a better than expected jobs report with more than 1 million people being added to non-farm payrolls. But gee, when we're losing or having a million people file for unemployment for the first time each week, and we add over 1 million for the month, does that really feel like we're making much progress from an economic standpoint? Let's take a little bit deeper look into the jobs report. For our timestamp, it is 4 p.m. Eastern Standard Time on Saturday afternoon, a rare Saturday edition of our S&P 500 update. Obviously, the futures are not trading right now, so that doesn't matter. Here's a chart of the July jobs report that I was mentioning in the beginning, and you can see that leisure and hospitality added 592,000. Now, that's pretty interesting. I played in a golf tournament in Orlando last weekend where I stayed in a Marriott, and it was a ghost town. There might have been 15 cars in the parking lot. None of the restaurants were open. You walked in, you felt like you had the entire hotel to yourself. Government jobs added 301,000. That's not so good. Healthcare and social assistance, that makes sense. But then you come down at very low numbers in manufacturing, financial activity, construction, utilities, etc., and then wholesale mining and information, all lost jobs for the month. So when you look at that, it just doesn't look like that great of a report, honestly. Let's take a look at how the charts are affected. So here's a chart of the S&P 500, and as a reminder, when we look at this recent zigzag, here's the current zigzag. And by the way, going back to our Elliott Wave outlook that we did back in January, pre-pandemic, where it said one of the black swans that could occur was the coronavirus when we were just hearing about it in China. We had 3 different Elliott Wave patterns that gave us a target of 346. You can go back and look at it on our YouTube channel, watch the recording. Again, it was back in January, and this current zigzag pattern has us moving up to the 100% extension level at 347. So that now makes 4 patterns that are giving us this same exact level. Now the question is going to be, is that it? That will make new highs. That'll be all over the financial media outlet. That likely will bring some of the retail money that hasn't been a believer in this upward move. But we've made some separation now from that 61.8% fib extension level that acted as resistance for a couple weeks. We've broken above that, so it does seem like a pretty clear run up to that 100% level, and that's supported by the DMI, which is showing that the trend, this current move to the upside here, has some strength to it. We have good separation between the 2 directional indicators. The ADX is moving up. Now it's just breaking above 20, which I use. It's a little bit more of an aggressive move, but I also make the periods 13 on the DMI instead of 14. So that is a slightly faster reading on the DMI, so it takes some of the aggressiveness out of using 20 as the breakthrough, so they counteract each other a little bit, but that's showing that there is some solid strength to this move, and the likelihood of going up and hitting that target level really exists. I also wanted to bring you back and show you the US dollar chart. We talked about this last week. We also talked about this in our Trade Finder webinar on Tuesday, which, by the way, we are not had a losing case study consideration. Each week in the Trade Finder, we look at the markets and we do a case study consideration. And over the several months since it started, we've yet to have a losing case study. Now, nothing's 100% in the world of trading or the markets, but that's what we're batting so far. And we looked at this. We had the dollar in this beautiful Elliott Wave triangle. We broke out. We had this nice Elliott Wave zigzag pattern to the downside. We hit the 100% level, which happened to coincide exactly with the wave 5 target price to the downside. And then we continued down. Now we closed out our positions in both SLV and GLD for winning positions for our subscribers, but we've moved back to the upside. And the reason that we closed them out is I was expecting a bit of a bounce out of the dollar to give us a better entry. In fact, I thought that the bounce might come up to this area right in here, where we had the low back in March, possibly up to the previous wave 3 high. You can see it's been a pretty vertical move to the downside. You put the moving average on there. We were a little bit oversold from the 10-day moving average. So all those things were setting us up for a potential bounce and then looked like a genius for a day or two. And then, yikes, back down we go to test the lows of the Elliott Wave pattern there. You can see the bottom of the forecasted move for the Wave 5 right there at 100% Wave 5 extension. So is the zigzag going to move lower? Is the Wave 5 pattern going to become extended? Because it's right at that 100% level. We did get a little bit of a bounce there at the end of the week. And as you can see on the SLV chart, gosh, it just brought it back a little bit, but we're a little bit overbought still, and discipline will just not let me chase this move. If we rocket up to that Wave 5 target and I miss it, well, so be it. But again, discipline says that when you have these vertical moves, you quite often get volatile corrections. So still waiting for a better entry point to extend or put on a new SLV or GLD position. We'll see how things work out at the beginning of the week. So looking at a chart of the VIX, you can see that, boy, we haven't really had the kind of breakout that you would expect from this descending triangle pattern that we've shown recently here, but we are kind of sneaking out to the downside there, if you will. We've looked at this descending triangle over the past couple of weeks, but we certainly seem to be moving down towards filling that gap, and that would coincide with the continued move to the upside on the SPY up to that 347 level, and then it gets interesting. Hope you've had a great week. Back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.